It's the 5th of April 2026. Welcome back to another episode of my weekly market overview. Let's get straight into it. Before we look at last week's trades and any potential setups for the week ahead, I just wanted to take a quick look at some interesting assets to see how they're behaving. Starting with Bitcoin. Bitcoin is ridiculously sideways at the minute. It had a big push to the downside that started mid-January and finished end of March, early February. And then since then, it has done nothing but trend sideways. Now, there are various factors affecting this asset. Bitcoin is still considered a risk-on asset as opposed to a digital safe haven. So that is one of the reasons why we're not seeing much activity at the moment, especially with what's going on in Iran. A strong dollar and negative ETF flows are also contributing to a lack of significant upside on Bitcoin at the minute. So yeah, this one is essentially untradeable at the minute. If you are down on the lower time frames, that's a different story, but I tend to try and look at these from a macro point of view, and at the moment Bitcoin is awful. Moving on to gold. Now, gold was for the longest time moving really nicely to the upside, but since around the end of January, early February, it has seen a significant correction, and then it's failed to make new higher highs. Currently, it's stuck between a rock and a hard place, spurred on by what's going on in Iran. Gold really won't be looking to rise anytime soon, especially with the dollar being up and with the risk of increase in inflation. That narrative is causing rates to hike and yields to increase, and it's not a good environment for gold to be rising to the upside. So we'll see if this creates new market structure within the next few weeks. But at the moment, gold is definitely not a tradable asset for me. Now, oil, everybody's talking about oil, specifically Brent Crude, which has been massively affected by what's going on in Iran and with the bottleneck that's been created by the Strait of Hormuz. Now, Brent Crude structurally to me is very much sideways. It had made this significant higher high when war broke out. And then since then it's tested that high, but failed to make a new high. And since then it has literally just been completely sideways. So although there is a lot of talk at the minute about oil in the news and in the media, and oil is significantly higher in price than it typically is usually, but unfortunately it's not a trending asset. It is just a sideways mess. So again, oil was on my radar a couple of weeks ago. It featured in a couple of the market reviews. Since then, I've just kept away from oil because it's extremely volatile and it's just not trending. So this is another asset that I'm keeping away from. Next, we move on to Nvidia. Now, Nvidia is a stock that has achieved phenomenal things over the last couple of years. But at the moment, it is very much a sideways asset. It has several specific pressures that are pressing on its stock price, I believe. And a couple of those are, firstly, the questions that are being asked of Nvidia and other AI leaders, such as what will the returns look like on the massive investments being made on AI infrastructure by companies like Nvidia. That is cause for concern for investors when it comes to AI stocks that are massively inflated like Nvidia. The rate hike stress as well being caused by war in Iran is also another pressure on stocks like Nvidia and other AI leaders. Specifically, the amount of energy required to run AI infrastructure is a massive pressure on these stocks. So it's another reason why I think these stocks aren't moving bullish at the minute and more or less moving sideways. If we take a quick look at Nvidia just from a purely technical perspective, we can clearly see that it last created its higher high in October last year, at the end of October last year, and since then it's failed to do anything notable. It's just been a sideways mess for the last few weeks and couple of months. So we'll see how Nvidia develops over the next few months and what its stock price does. But at the minute, this specifically is not a tradable asset for me. Next, I'd like to take a quick look at the two trades I was in last week, and both of them concluded during the week. The first one being BP. This was a fantastic profit, 3.85 Rs I achieved on this trade. At its peak, I think it achieved 5.4 hours, but because I was trailing the stop loss reasonably aggressive, I was trying to protect the downside as much as possible. It tapped me out eventually on the 1st of April for 3.85 hours. Really happy with this trade. It was a great result. Next, I'd like to take a quick look at the short trade that I took on Tesla stock last week. Now, this trade concluded at 2 hours in profit. Another fantastic trade. I decided to set a hard TP on this one rather than trail the stop loss because I had a feeling it was going to pull back at some point based on previous waves that had been made on Tesla stock. I didn't want to push my luck too much on this one, and it was a good decision because it pulled back massively and I managed to get out just on this last bearish candle at 2 hours in profit. Another great trade. Moving on, I'd like to take a look at potential setups for the week ahead. Now, I typically run my market report on the weekend, and it spits out a load of data based on technical analysis that I feed into it. Also, the commitment of traders report, and also certain macroeconomic and sentiment based analysis that I feed into it, and it spits out some recommendations. Now, this week it has highlighted platinum and palladium for potential longs. If we take a closer look at these two, starting with palladium, we can clearly see that the 4-hour chart has been making lower lows and lower highs, but has stalled somewhat and is sideways at the minute. What I'm more interested in is the daily chart. What I really need before I start looking for longs on palladium is for this asset to start trending above the 20 moving average on the daily chart. So although I'll be looking for longs on palladium, I have to be patient and wait for the daily chart to start behaving right before I start looking for entries on the 4-hour chart. Platinum, the story is almost identical. The 4-hour chart has stalled somewhat. It was making nice lower lows and lower highs, lower lows. We're now looking for long positions. The 4-hour chart looks like it might flip to a bullish structure, but what I'm specifically interested in, as I was with palladium, is for the daily chart to be trending above the 20 moving average, which at the moment it's not. So I need a big push to the upside. I'm going to need a little bit patience with these two over the next few days, and hopefully they make a big push to the upside, get above the 20 moving average on the daily chart, and then I'll be looking to pick off entries on each one's 4-hour chart. Another asset that my market report has identified, this time for potential short positions, is natural gas. Now, this one looks a little bit more favorable in that the daily chart is trending below the 20 moving average. So the daily chart looks right. Also, if we take a closer look at the 4-hour chart, it is making nice and steady lower lows and lower highs. So what I'll be doing is I'll be waiting for a push to the downside, which we're currently in at the minute, and then some kind of a pullback. And then from there, I'll be looking for potential short positions. At the moment, natural gas looks like a potential contender for short positions and looks like it's setting up quite nicely. So we'll keep an eye on this one, see if it actually gives some nice opportunities. Last but not least, let's take a quick look at the US stock market, specifically looking at it from the perspective of the individual sectors to see if there's anything interesting. The tech and communication sectors have pulled back really nicely to the 20 moving average after making a bearish extension. But what we're waiting for is nice red candles to show. And at the minute, that's not happening. So although I could look for shorts within tech and communications sectors at the moment, the chart isn't really giving me them vibes. So I'll be waiting to see if we get some nice strong red candles on these two sectors. If not, I'll be just sitting out of these. One very nice looking chart is the healthcare sector, or specifically on the daily chart. It has made this huge push to the downside, and now it's pulled back to the 20 moving average. Now, if we start seeing some red candles, which we have on the 4-hour chart, I will be looking for potential shorts. I went through my screening process earlier on and specifically focused on the healthcare sector looking for shorts. I identified one potential asset that I might be looking to go short on based on how the market's open tomorrow. AbbVie is a stock that has pulled back really nicely. If we look at it from the daily chart perspective, it's pulled back to the 20 moving average after a big push to the downside. It's put in a really strong red candle. That looks really nice on the 4-hour chart as well. So depending on how that first 4-hour candle plays out on Monday, I'm a little bit nervous because obviously the markets are extremely volatile at the minute with what's going on with the war, with what's going on with Trump and everything that he says and how it affects the market. I'm not looking to put a stop order in now as tempting as it is. I'll wait for the markets to open and see how they react on Monday morning. Hopefully price doesn't move too far beyond my entry price and I get the potential opportunity to enter on AbbVie for a short. If not, I'll be running my screener again to see what other opportunities there are. That's it for this week. It was a really good week last week. I'm really happy with how things played out. We got two nice trades with BP and Tesla. We achieved 5.8 Rs, I believe, in total profit, which is a great result. I'm being really cautious and careful in the markets with what's going on in Iran and with Trump. The markets can swing wildly one way or the other, and I don't want to get caught out. So I think cautious and careful is the right approach. We'll see what the week brings. Thanks for joining me. I'll catch you on the next one.